This is Laricy Live, and I'm your host, Matt Laricy. We're giving you unfiltered access to the world of real estate, where we can cover the market trends, news, and honest answers to keep you ahead of the real estate game. Laricy Live is brought to you by Lincoln Title. Lincoln Title is the best and most efficient title company in Chicago and is the best place to close your property. This podcast is brought to you by Titan Builders. Titan Builders have been remodeling condos and homes in the Chicagoland area for over 35 years. Whether it's remodeling your kitchen or bathroom or getting your home ready for sale, Mike and Mark are your go-to guys. Laricy Live is brought to you by Guaranteed Rate and Ben Cohen. Ben Cohen is the #1 lender in Illinois and can close your loan in as fast as 8 days. All right, so today we are here to talk about the Q1 stats. Now, I think it's very important to always look at the numbers. We can all sit here and talk about how great we are, how good the market is, how busy we're doing, but the only thing that actually matters is what do the stats actually say, okay? Because we need to look at the numbers and dissect those to understand where the market is and where the market is going. Now, I can say that my market stats videos are usually my least watched and least talked about videos. So I realize that not everybody likes to talk about the numbers. But for those number geeks out there, this is really important for us to understand the marketplace. So as a whole, Q1 was a phenomenal market. Let's just take a look at that and to understand that this market was phenomenal. Now, if we all remember, and if anybody's bored, you want to go back to my podcast in October when everybody said the market was going to be shit for Q1. I said that this would be the best first quarter since 22. So I said 25 would be the best market since 22. And I will tell you right now, the stats show that this is the best market since 22. So how did I call it? I just said, like, people get used to the rates. We'd have low inventory. We'd still see a lot of people locked into, their low rates, so they're not going to want to move. So we'll still see that freeze. And that's kind of what we're seeing. But at the same time, we also have still seen a tale of two cities. So the tale of two cities, this has been a tale that we've been telling now for 5 years almost. We're going on 5 years. The tale is getting old. Like, we want to get a new book, but I can't get a new book because the book hasn't changed just yet. So I still got to keep it. It's like a book I got to read my kid. I read the same book to one of my kids every night of the week since she's been born. I got to read the Polar Bear book. And it's like the same thing. It's like at a certain point, I'm like, can we just read a different book? Nope, got to read the Polar Bear book. That's what we're doing today. We're still reading that Tale of Two Cities, okay? And what I can tell you, though, is when we look at the stats, we are seeing that tale. It looks like that tale is going to start coming to an end, especially we'll know that when we talk about these stats here in a moment. But let's also take a understanding that the drastic differences in the marketplace is eye-opening. If you put something up in what we call the outskirts are pretty much, Old Town Triangle up to Lincoln Square, and then Old Irving Park, all the way down to West Town. You put something up there, there was literally lines. There was lines around the corner in Q1 to get into the place. At the same time, properties in the downtown markets, there was crickets. It was like a dust ball. It was like going out to the Wild Wild West. There's just nothing out there. There's nothing happening. So we still have to understand is that's the big difference between the marketplaces, okay? So when we look at these stats, we have to also understand that, what do these numbers say, okay? What I do is I compare rolling 3 months. So I compare, Q1 stats compared to Q4 stats, okay? So this is just a direct reflection of that. And these stats are pulled from InfoSparks, which gets its information from the MLS, okay? So I don't make up these numbers. These are directly pulled from there. I have to wait a couple weeks because sometimes the data is delayed because people are still closing out things. And that's why we're doing this essentially 2 weeks after Q1 ended, because I need to make sure that the information is as accurate as it can be. But when we look at the numbers, we have to also say is that these numbers don't say the full picture. So give you an example, when I talk about, the inventory, okay, and I talk about your months of inventory, this is the average. I'm not breaking down $1 million plus, because $1 million plus months of inventory is different than a $400,000 month of inventory. So we have to understand is that this is compared to last quarter, okay? So the number's going to look really high, and that, it is a snapshot of an average. So if somebody out there is well, my place is 1.5 in River North that's been sitting, and you said it's not that bad of a market. It's okay, well, that's a totally different marketplace. So let's understand that numbers can be skewed a little bit, but this is just a whole. So let's look at the first stat. Sales price. Sales price was up on average 5.3%. So it was up on average 5.3%. The biggest price growth was Logan Square. Logan Square was up 17.1%. 17.1%. That's pretty crazy. However, at the same time, like Wicker Park and Bucktown was down 7.3%. So some people are like, what do you mean it's down? That market's so hot. Everything was sold for way over ask price. It's like, well, we also have to look at is that like there's some like pretty high sales probably in like Q4 for Bucktown Wicker Park. So let's not like freak out. Like prices are still up. But a good one to watch is looking at the near north side. Their prices were up 13.2%. That's like the first time I've ever seen such a big price growth for the near north side. Now, again, somebody's like, well, prices are up 13%. It's like, yeah, compared to fourth quarter. I mean, prices go down in Q4, guys, and then they go up in Q1. I talk about this all the time. I've said this in the last like 4 podcasts that real estate trades at different rates at different times of the year. You want to know what the big difference is? Look at these sales price stats. I mean, like even the Loop is up 3.4%. Lakeview's up 13.1. West Sound's up 1.5. North Center's up 11.6. You know, Lincoln Park's up 7.7. So like this just shows you that the prices are up. So what can we tell from this is that, like, again, Q1 prices are always up compared to Q4. There's nothing crazy here. I can say that I think in Q2, we're going to see this price growth remain the same. Next big stat we want to talk about, market time. Average market time in the city was 51.4 days, okay? So 51.4 days was the average market time. The lowest market time, was North Center, which, remember, guys, includes Roscoe Village, okay? So that one's been like the lowest market time for quite some time. It's also not the largest area. So comparatively speaking, it's not going to be the largest area. Now, which area had the highest market time? Still the king, near north side, 111 days. 111 days. So when we talk about this tale of two cities, think about this. We talk about a tale of two cities. You got 111 days in near north side. You have 109 days in the South Loop. You have 94 days in the Loop, okay? That's your heart of your city. At the same time, Lakeview's got 15 days. Lincoln Park's got 51 days. You know, you got 12 days in North Center. Logan Square's got 24 days. You know, that's a big difference. Now, I know somebody's gonna be like, oh, what do you mean Lincoln Park's got like 51 days? Again, it's average. Like you get a lot of like 3 million plus sales that are gonna sit there for a while. You know, like if you look at places like in like Lincoln Park that are like $500,000 and less, it's like 4 days is average market time. I don't actually that, but it's like that low. It's like crazy low, okay? Because normally they sell the first day, but they wait to flip the status for a couple days, so that's like how it's like kind of delayed. But overall, like this market time shows you, I mean, to look at the fact that you have 111 days as an average market time in one market, and you got 12 days as average market time in another market, and they're like, 2.5 miles apart, that's pretty wild of a statistic right there. Next stat is my favorite stat. Months of inventory. Months of inventory is my favorite stat because remember, 4 months is what we consider a balanced market. Less than 4 months is a seller's market. More than 4 months is a buyer's market. Overall, we average 2.2 months of inventory. That stat, that around 2-ish months of inventory has stayed for a couple years now, okay? So 2.2 months of inventory, that's a hot market. That's not insanely hot. Like some parts of the country have like 5 days of inventory. But overall, in our downtown markets, we have 2.2 months of inventory. The highest amount of inventory, no surprise, is the Loop at 4.3 months. The next in line is the near north side at 3.8 months. So, both markets are, buyers markets, a slight edge to sellers, slight edge. Now, again, I pulled this stat, so I have it. Somebody's like, hey, I got a $1.5 million place in River North, and you told me that, there's like, almost 18 months of inventory. It's like, well, there was at the start of the year. Guess what? That number's down to just below 9 months. So that's a big number. Inventory's been cut in half in that area. And the fact that you're at 3.8 months of inventory in that location is huge because it shows you that when we talk about this tale of two cities, will this tale ever end? It's like, well, this is showing you that it's starting to come to an end. At the same time, okay, let's look at some of the other stats. You got the lowest amount of inventory is Lincoln Park with 1.3 months of inventory, which is tied with North Center. Okay, they also have 1.3. Bucktown, Wicker Park's got 1.5. Logan Square's got 1.4. West Sound's got 1.8. Each one of these areas has less than 2 months of inventory. That's crazy. Okay? Whereas you're comparing the other ones to 4 months. You got double the amount of inventory in one area. Okay? So it's a substantial difference. But again, the main thing to watch is that the inventory in the downtown markets is coming down. So this is going to be a big one, a big one to watch. Because if we continue to slide down and the near north side and the loop get down to closer to 3 months of inventory next month, or next quarter, okay, like if we're in like the mid threes, that means that next year we're going to start off like closer to like a low threes, high twos, which is almost average for where it normally is. So that shows you. So again, when we talk about, look, man, how do you always predict the market? Where do you think it's going to go? It's like, I don't know. I look at these stats, I sell like 500 plus places a year. It makes me sound like a dick, but like I do. So like you see a lot of stuff happening. And then I talk to thousands upon thousands of people a year. So I can, I use all that stuff and I watch the news and, money markets and things like that. And it's like, okay, well, I take all that information. I'm like, okay, well, knowing that this has happened, this is probably what we could predict is going to happen. And then boom, it happens. Like, how'd you predict it? I was like, I don't know. I'm like, all this stuff shows it. So that month's of inventory is a great one to watch. Next one, closings. ABC, baby. Always be closing, right? Glengarry Ross. It talks about this all the time. Ain't closing, don't matter. Like nothing really matters unless I love when people are like, well, I got this pending. Like, pending doesn't mean shit until it closes. All that matters is what you close. So closings on average were up 8.7%. So you have up 8.7%. Which area performed the worst was Bucktown, Wicker Park. They were down 11.3%. So they're down 11.3%. Now, again, guys, like Bucktown, Wicker Park, like the way I map it out is like the true areas. It's not a huge area, okay? So like that doesn't mean it's performing bad. It's just like literally like you can't have a ton of closings if you don't have a ton of inventory. That market's been super lean. So it's, again, this is where like numbers can kind of be skewed. So if like you don't have a ton of inventory, you're not gonna have a ton of closings just naturally. So your closings would be down. That doesn't mean that the market's not doing that. Market is out of control on fire. There's just not that much inventory. The place that had the biggest change in inventory in a positive way, again, North Center, up 27.4%. That's insane. Up 27.4%. After that was Lakeview at 19.5%. You had the West Loop was way up at 13.4%. And look at this, South Loop, riding in on that dark horse, huh? Galloping in, up 16.7%. Your heart of the downtowns, near North was up 0.5%. Loop is up 5.3%. So again, overall, closings have been up, and again, we expect closings to be up because you have a lot more sales in Q1 than you have in Q4, so we're naturally going to go up. And of course, sometimes it can go down if you're in a super low inventory area. But overall, it shows you that we've had a very strong first quarter. So what can we expect here? What's my takeaway from all this? My takeaway is that it was a killer Q1. Killer Q1. I mean, we've had some monster sales. I'm not talking about like I haven't had any $10 million sales. Okay. So like I wish I did, but I didn't. But I'm saying it's like the market as a whole has had a lot of like $7-8+ million sales in Chicago, which we don't normally see. We've been seeing a lot of momentum get gained down here. Inventory is moving. The high-end inventory in the heart of the city, which has statistically been the worst, is doing better. I do think the market you have to have the right frame of mind. You have to reset it, your mentality of what you're going to get. But like that market's picking up. Overall, I think the market is as strong as we thought it was. It's kind of like, what was that when the Cardinals lost to the Bears? It's like, they were exactly who we thought they were, right? Like he started, they're exactly who we thought we were. It's like to me, it's like did the Q1 surprise me? It's like it's literally playing out exactly as I said it was. Watch these podcasts because like what I say happened or what I say is going to happen happens. I'm not trying to sound like a jerk, but it just there's video proof of it. I just said, hey, this is why I think it is. What's one of the reasons why? This is my lowest, as I said earlier, it's my lowest watched podcast that I do, but I keep doing them because I know there's a couple of number geeks out there, and it's important to look at this because this is one thing that I use, just one thing that I use to try to predict where the market's going to head. And look at these numbers, dissect them, because it's going to show you a lot. And as I look at these numbers, looking at like how we're performing the first 2 to 3 weeks of Q2, it's wild. Q2 is the best quarter of the year. Okay, Q2 is when we're going to have the most sales. So keep an eye out for it. Stay tuned for our next quarterly podcast about that. And of course, to our weekly podcast as well. Thanks for listening to Laricy Live.